Good morning, traders. Sorry about the delay this morning. Ran into some issues with something, and it's just a struggle trying to get it going. How are you today? This is episode number 2465. It is Tuesday, the 9th of May, 2023. We started at 8:06 a.m. Chicago time. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This is the pre-market summary sheet here, except that I'm pulling it from the website as opposed to the live spreadsheet. The live spreadsheet wouldn't populate for me this morning. Apologize for that. And so we have this kind of snapshot that was posted on Twitter to work off of. The overall posture this morning is mild risk off across the board. Indices are off by a little bit. Euro stocks leading the push down. It looks to me like the U.S. products were sideways until the European Open came along and started to push lower. This morning, we got Saudi Aramco earnings. We don't see that often. And then after the close, there's a lot of energy stocks, broadcasting, and so on and so forth. I'll let you take a look for yourself in terms of what earnings are doing. There's no point spending time on that when that information is fully available through Yahoo or whatever. What's on deck? The biggest risk overhang remains the debt ceiling. Biden's meeting with President Biden is meeting with House Majority Leader McCarthy and others on debt ceiling today. We do have the CPI tomorrow, which the market is anticipating very close, looking for very closely. Chinese imports lower than expected, exports higher. ECB's Kazakhs says rate hiking may not be finished in July. Growing commercial real estate concerns. One of the things that is really another risk overhang is there is a ton of commercial paper on the books with these banks, and this paper is expected to be somewhat toxic. Do you remember those? The same thing in 2007, 2008, 2009. We have that same kind of a problem today. And it's a lot of those losses are unrealized at the moment sitting at these banks. And so that sector's just gotten absolutely destroyed and beat up over the last 2 months or so. This morning, before the market opened, there wasn't anything major to discuss here. We're getting the 10 o'clock. We're getting the IBD tip economic optimism number, and we have all these other, ECB's Lane, Williams, Schnabel, and so on. And there's not much sense in spending time on that. Looking at the S&P, this morning is in a multi-distribution profile. It's a double distribution profile. We'll look at that in a minute. The volume so far is 123,000 contracts, looks like. 126,000 contracts currently. The inventory remains 100% short, 100% short. And we only have about 19 points of range. I believe it's still so. It's 41.53 to 41.34. Still the same as before at the point of control of 37. So not much has changed since the pre-market summary sheet from Convergent Trading was printed. That was about 20 minutes ago. And that's where we stand. I pointed out the change in the rotations yesterday. The volume is very low yet again. So we have another grinder as we saw yesterday. Let's take a look at the charts here for a minute. So here's the S&P. The S&P yesterday If you recall, I'm not going to pull it up, but if you recall, the expectation yesterday is that it's very likely to test the 41.35 or 34.50, the prior day's point of control. I talked quite a bit about the fact that we had this point of control remaining right here while we pushed to our target from last Friday of 41.53, and it actually pushed through all the way to 41.63 1/4, and then pulled off, came off more than 12 or 13 points into the close, but still the point of control wasn't dragged up. So even though on the candlestick it looks like a pretty strong up day, from a value perspective, from a volume profiling perspective, I discussed this at length yesterday. I don't want to repeat myself. But overall, I expected the market to be attracted to this point of control, and that's what we did. So the play yesterday was really to lean off of, really nice setup right there, to lean off of the VWAP mid area on a pullback with decent structure. Look for the short and look for it to push lower, form the IB, which it did at 41.4250, and then squeeze down into 41.34. And what it did is it just kind of chopped around, and we had the largest rotation of the day was down yesterday right there. More hope that we would get to the 34.50, but no cigar. Comes all the way back up and goes neutral on the day, meaning it broke the IB high and the IB low. Broke the IB low first, and it broke the IB high, and then it finished above the mid, which is an 85% historical probability. Past performance is not necessarily indicative of future results, but in general, if you have the IB and the market breaks one IB, which is the prevalent, that's a historical probability of about 67%. It would break one side but not the other. Actually, depending on the product, it's somewhere around 67 to 74%. That it would, if it breaks one side of the IB, it will not. It has not broken the other side historically. Okay, historically, and then, but if it breaks the other side, then there's like an 85% historical probability that would finish above the mid. So the mid becomes this kind of reference price, and that's what we did yesterday. So we closed at the upper end of the range. We had a neutral normal day, meaning indecisive day. The market was not able to push in either direction. And then this morning, the Asian session, quiet until the European market opened right here, and it went sold off. And so what we end up with in the overnight session is this double distribution profile. That's pretty tightly wound up at the low end of the range. So 41.40-ish to 41.35-ish. So we ended up getting back to the 34.50 in the overnight session. We printed a 41.34 low, but that doesn't count because it's in the overnight session. We need to see that in the day session before this line is closed. So we are beneath the full session mid, full session VWAP, and there's some separation between the full session mid, full session VWAP, and the overnight point of control, indicating to us that there's a slight imbalance to the auction currently. The auction has moved lower and lower faster than these other day-generated reference points, and that's what we start with. To me, overall, it looks pretty bearish. So if we look at the NASDAQ, same issue, double distribution profile. NASDAQ relatively a lot stronger, neutral, extreme up. NEU is the day type for the NASDAQ yesterday. This is normally a reversal day. The NASDAQ did ultimately take out the high of its trend day, which is what was expected in the ES as well. So the NASDAQ got the job done. and then it came all the way back. But the NASDAQ is also trading inside of the prior day's range. We do have separation, which is getting very quickly filled in between the full session VWAP and the overnight point of control. So that puts the NASDAQ, even though it's a multi-distribution or a double distribution profile, it puts the NASDAQ in more of a balanced state, even though it's got a multi-distribution profile, meaning a double distribution profile, which normally speaks of imbalance. It actually is coming in with a balanced state. So the NASDAQ's most likely going to have a hard time pushing farther down. Also, yesterday, the NASDAQ accomplished its VWAP, the VPOC from the prior session, which is what we wanted to see in the S&P. This is the equivalent of that 4134.50. The NASDAQ had it at 13,265, and it took that out in the IB. And so it got, the NASDAQ was just much more efficient at getting the auction markers done, getting the job done, and it gave it a lot more room to the upside. And now it's pulling back. So we're still trading inside of Friday's reference, and we're waiting for CPI, and it just isn't looking so incredibly hot for the session. RTY, look at this thing. I mean, this thing's incredibly weaker than the others. Not only did it take, did it go and take all the markers on the downside, even the low of the overnight session, it actually stayed down here. It stayed below VWAP. It stayed below mid, and it's pushing even lower. The Russell is just incredibly weak, which actually makes it, makes the opportunities a little bit better for those traders. The Russell's providing better context and better opportunities. Here's one of my favorite charts. It's the relative delta broken into very large, and small lots for the ES. Small lots are up to less than or equal to 9. Large lots are 10 to 99. And then the very large are 100 lots or higher. This is on MBO. However, I started my platform this morning. I was planning to start from home, but came in, so I restarted the platform. So I lost the MBO data. So if your delta looks different than mine and you've had your Edge Pro X running all day, yours is more right than mine is. But this gives me a pretty decent idea of what things look like, and what they do look like is that it's pretty weak, right? We've got a lot of participation to the downside, and we have all three parties on the negative side. So I'm expecting the market to kind of grind its way down through Friday's range. This is what I'm looking for. I'm looking for this thing to break to the downside, the early line in the sand being 41.42 or so this morning. So the NQ, same story. Pretty decent action to the downside. Price and delta moving. Price and delta moving the same direction. Large and small are negative. We'll see if that gets rebalanced a little bit on the open. For crude, same kind of thing. Crude has not hit my target yesterday that I talked about, and I said it may not do so for a couple of days, but 74, very important retest from below the 74. It did not quite get there yesterday, and now we're kind of pulling off. But if you look at crude, the zero line, which is the open, price is below the open, and so is the delta, so it's supportive to the downside. Russell, same story, same everything. The Russell's open is way up here, and here's price way down here, and so the delta is actually a little bit stronger than I would expect for this product. The Russell's still looking like early on it is very likely to squeeze, rebalance some of this delta like the ES is here. I expect it to rebalance some of this delta, but overall, I'm looking for this low to be taken out. And if we take out the low, let's look at the intraday chart. If we take out, look at where we are. I mean, look at where we are. This is exactly what the auction theory is supposed, this is how the auction is supposed to work. We tested above, came back, consolidate at the point of control, right here, 41.53. Then we break away from the box to the downside, come right back, and then the engine, the afterburners get turned off, and we are just circling around this price. This is exactly how the auction is supposed to work. Exactly. And so we are stuck here right around this kind of massive magnet that we've built through the entire month of April. The entire month of April has been revolving around 41.53. We may go away from it for a couple days and then drop below it, but overall, the market's saying, given all inputs and all information that we have, the price of the S&P 500 expiring the third Friday of June of this year, the fair price with everything being counted in is 41.53. That's your perfect price. This is what this is saying. That information cannot be gained through a candlestick chart or whatever other kind of chart you use. It can only be gained through a volume chart where we can see the actual volume at price using tick data and where the market loved prices and is considering the product's fair value or fair price to be in that 41.53, and we're still stuck there. Yeah, sure, we're below it. We're trading at 41.36. But when you're looking at the auction in a broader view, plus or minus 30, 40 points doesn't make a difference. You're still stuck in this magnet right here, okay? Still wedging in the magnet, and we are still in balance. It's just getting so tired. I'm getting tired of this kind of region because as soon as we move away, the expectation is we move back. As soon as we move up, the expectation is we move down. So I don't get too excited on those trend days because there's just nothing new to price in. Just remember that. The purpose of the market is to find balance, and the ES is the supreme king of doing that. Okay? So opportunities, and by the way, I just said this, the market's job is to find balance, and the ES is the supreme commander of doing that. Here's the thing, here's the catch. The catch is we don't want that. We don't want balance. The catch is we make the most money when prices are inefficient and are out of balance. When things get wacky, that's where the opportunities are. That's where volatility picks up. That's where people make moves with their money. And so seeing a market, when I come in and say, hey, the market is in balance, blah, 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 which it's not today. It's a little bit out of balance. When I say that, when you hear me saying the market's completely in balance in the overnight session, the key thing you want to pick up there is that the opportunities are likely to be slow and slim, so be patient and be very, very picky. When we come in and the market's opening in a gap, in an open auction away from the prior range, that's imbalance. That's where the higher opportunities are. That's where I'm looking to trigger a trade within that first 20 minutes of the open. When the market's in balance, I generally don't do anything for the first 20 minutes to a half hour of the open because the market's in balance. Why am I trading? It's efficient. It doesn't need me. And our purpose is to support the market's intention to find balance. That's what we get paid for. That's what we take risks for. If you don't get that, I suggest you really work on understanding what your purpose is in the market. It's not to pick up ticks. It is to provide a service, and that is to provide liquidity and make the market more and more efficient. Without us day traders, this market will be gappy and choppy, and it'll just bop around all day long because there isn't enough liquidity. You want to see what that looks like? Go look at Coco. Go look at RBOB. Go look at some of the event contracts. You know, there isn't a lot of two-sided day traders in there, and you get a market that's just like popping and chopping all over the place. So this is your purpose in life as a trader, and it's a very important role that is kind of doesn't get spoken about enough. But when the market's efficient like this, you need to step back and kind of let things build, let things set up this morning. That's the best I can do for you today. Looking at the ES here, what is the likely play? Again, I'm looking for this to be the line in the sand this morning, this 42 zone, 42. And then on the downside, it's 35. However this moves, I'm going to use that almost like as my opening range. However this moves, whatever it breaches, that's the side I'm going to be looking to trade from, assuming there's strength. If it breaches the 35, now the breach doesn't matter to me. What matters to me is the pullback. If it breaches the 35 with strength and the pullback is weak, then I'm looking to short, and I'm looking for the next stock zone down, which is 41.26 or so, 41.25.50. So that'll be the next target. Once it clears that, I'm going to look for the 41.16 and so on and so forth. And we trade these stock zones as we move lower. That's what I'm looking for this morning. Other than that, I have no other plan. Oh, the other piece, the better trade this morning is a breach of 42, weak pullback, and then a strong push towards settlement gives us a gap to settle trade. Look to get in around 40 to 42 is ideal, and shoot for 52 for 10 points. Not a lot of distance, but that's another clean, clear trade if it materializes. Good luck today. Don't forget to hit the like and subscribe button if you have not subscribed to the channel. And look at the description of the YouTube video to get some important links. Good luck.